Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be going over a easy 3-step trading strategy that you can start implementing today without the need of a daily bias. This is sort of a mechanical strategy that you can follow. It is going to imply some market structure knowledge, some POI selection understanding, some ability to read liquidity, and an idea to execute and trigger trades. We're going to be going over every single step there is so that you can start implementing the strategy and potentially profiting out of it. So as I said, you will need market structure understanding, but I will guide you through everything there is so that it is very easy for you to follow along and to start marking out your charts, first of all, and looking at it precisely before you try and execute the strategy. You want to get some experience watching it work and then you want to attack it. So without any further ado, let's get started with today's lesson. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video, and now into today's lesson. Enjoy the video. Alright traders, so here we are on the charts back again, and what you see over here is my preparation for gold this week, using my longer term approach strategy that I've taught in this channel for over a year now. But I just wanted to show you this before we dive into the actual steps, because this is what you're gonna achieve. This is how your charts should look like whenever you are trading this way. So as we see over here, we have a clear direction based on the latest market structure break, which we're going to be covering in a second. You have POI selections and clear areas where you want to interact, and you have potential targets that you may want to pick. Okay, so with that understanding and with this as my preparation for gold this week, let's dive into a random pair and let's prepare the charts so that you're ready to execute the strategy. Okay, I'm gonna have a blank chart and you're gonna see me mark out these things so that you're able to prepare the strategy for yourself and execute it on your own. So let's once again go over here. We're going to be picking a random pair. As some of you guys already know, I mainly trade gold in two different ways, short term and longer term, and I trade EU, GU, and GJ longer term only. Okay, so we're going to go to random pair. I'm going to scroll up and down, something that I never trade, and we're going to be marking it out. Okay, so let's do this right here, and AUD CAD is what we're going to be working with. As you can see, there's some sort of analysis, but as that is from the past, so we're going to be removing all the drawings. I have not looked at this pair in a while, and we're going to get started over here. Okay, so step number one, once again, I have a white chart, meaning no labels. So step number one, let's do this over here. Step number one, you are going to be looking for direction. Now, how are we going to get direction? Well, it's going to be simple. Well, 4 hour to 1 hour break in market structure. This is your first step that you need to go over. Okay, you need to look from the 4 hour to the 1 hour, these 4 time frames, and you need to label the most recent break. Okay, and that's the direction that you're going to be trading. Once again, it doesn't mean you cannot trade the other direction. We're going to be getting into that a little bit later down the video, but this is going to be your main direction. Okay, so let's skim through the time frames. And as we can see, once again, I'm focusing on the recent price action here. And to me, the most obvious break, let's confirm that with the 1 hour first, is this over here. This is a significant break in market structure. So we're going to be labeling that. That's step one, done. You only want a break. You don't want anything else. Now, when we look at this break and we see this sharp descent, we can see where price is reaching into. Okay, we have a very obvious swing low here that we've now captured. So liquidity, sell side liquidity has been purged. So we want to denote that. Okay. So this is your step one. Price is reaching into sell side liquidity. Price is broken. Market structure to the downside. Great. Now, next step is you're going to be fibbing the leg from top to bottom, the leg that you're working with. Okay, so let me quickly do this adjustment over here. Once again, goal is to identify direction. Look for where price is reaching into. Okay, so now we have that over here. We understand that our step one is done with this break. So we're overall bearish bias. Now we want to fib the leg that we're working with, the leg that provided this break. Once again, I'm not worried about this high here. I'm worried about the most recent break, which came from this high over here. So now we have this leg from high to low. And once again, I think we're very likely to experience some sort of bullish upside here. Very, very likely, considering we've grabbed this major swing low, we've had this massive descent, we're going to be stopping in short sellers that came in late, and we're likely going to be pushing to the upside for a while. So considering that, and we've now fibbed the leg, you want to look for POI selection. And I've done that numerous times, but we're going to be getting very, very in depth here, and it's going to be actually very, very, very beneficial for you as a listener. So we label this, we understand that we're looking to trade short, we look for the first POI, which needs to be above the 50%. Now that we know that, the first one is this breaker block over here, right? We have this segment, which is going to be the breaker block. That's your first POI that you're going to be looking to go short from. Very, very simple. So step number two, and let's actually make this a little bit better, because once again, I'm not trying to make things complicated here for you. They don't need to be at all. Step number two, POI selection, liquidity reading, discounted areas, naked levels, imbalances. Okay, so we're going to be going through them right now. Once again, discounted area is anything above the 50. In this case, our first POI above the 50 is this breaker block. And I actually forgot to include key levels. That's the one above the 50. Now the next POI is this wick POI over here on the top. And once again, we're going to be doing something with this wick low here in a second. But now we know that that is our second POI of interest. Third POI of interest, you can see we have another naked level here, which we're going to denote as such. Naked level is a very simple concept. It's any level, wick low in this case, since we're trading bearish, that has not been tested yet. So if this candle, this bearish candle would have come up here and tagged the level, we would no longer be looking at this as an area to potentially go short from. But since it has been left unmitigated, this wick low has not been tested yet, there's a high degree chance that we may see downside coming from this particular price point. It's likely to be very, very sensitive. Okay? So we denote that, right? I would include the FU candle as your next level, POI selection right here, and you're going to be labeling this high over here as your buy side liquidity. I would not be looking to short this area, the previous high. If price gets up here, it's likely going to purge and tag the high. So this is going to be our buy side liquidity. Now let's keep going with the levels because we're not close to being done yet. And the next naked levels that we do have is, once again, you want to be zooming in. You want to be looking across multiple time frames, making sure things are making sense for you, okay? In this particular case, for me, step number 2 is very simple because we do have these naked levels that could, once again, and let me refine that as I move across the time frames, very well push price lower. If price continues to drop, then you don't have anything to do here. But based on experience, we're likely to retrace now. So we're preparing for the short side since this is our last break in market structure. So we denote that. We have the levels, and the next level of interest to me, once again, wick low. Not interested because it has been tested on this bearish candle that you can see. On the other hand, we do have this naked level here that has not seen a test yet, right? So we see that, we denote that. Now we have a new level to potentially go short from, right? And this way we're slowly starting to build our expectations and analysis for this market. Whoops. So we have that. We have another naked level here, which we could easily account for with the order block here. Make sure it's the high here. This one has been tested with this wick, so it's not interesting. This one is the one we chosen before. This one is the opening of the order block, so we've covered that. And now the last step into step number 2, which is once again the understanding of all of these things here combined. So, which is going to be key levels. Key levels, we're going to be looking for round numbers within our POI, okay? Because we're going to see that price usually turns around at round numbers, or at least provides some sort of decent reaction. So we should be easily be getting key levels in to be more precise in our areas, okay? Any key level for me is any number that finishes in 50 or 0. So we're going to be looking for them. We have a 50 here within the within the POI. Great, another level. And once again, as I do that, I see that we have a naked wick, so I'm accounting for that. Now that's one. We're going to be looking for one more here. So we can do 50. We're going to be looking for one more here. We're going to be doing 800. Okay, now you've finished mapping out your market for shorts, right? Now you have a clear expectation that if price ends up coming up here in any of these levels, you're going to be looking to short to get this new expansion leg lower. You're looking to trade the expansion here. Now, your step number 3 is obviously going to be your entries, right? And for the entries, it's a very simple system. Step number 3, entry. You have 2 options here. Option 1 is you enter blindly at the key levels, which I would not advise to do. Much so, you want to be looking for confirmation, okay? As price is moving into your POI, you're going to be looking for the following pattern. So let's draw that out for you. Once again, continuing with the bearish example here, right? We're looking to sell retracements to go lower. So we're going to be denoting that. You have your selling area here. You have a price that expanded lower, and we're actually going to be using this. It's going to be much simpler. We have that. So now as price enters your POI, let's actually get rid of this because this is not going to be appropriate. Sorry for that. Won't take long. Let's make this bigger. Let's do this. So as price enters your POI over here, you're zooming into the lower time frame, right? Over here as price is tapping your area, and you're looking for the following pattern, right? You're looking for liquidity engineering, which is what's happening over here when we have consolidation, relative equal highs, things of that nature. You're looking for refinement tap into the clearing of liquidity if available. Not always. You're going to have a naked wick here sitting a little bit higher, right? But that would be the ideal scenario. Once again, this is not necessary to have a refinement wick level not tapped, but if you do, you want to be paying close attention to that because that's where price is likely to tag. Okay, so liquidity engineering, liquidity sweep, which is the clearing of liquidity, change in market structure. As such, you want to see big bearish candles here, right? You don't want to see slow price action that's really bearish but sort of retracing. You want to see big bearish candles coming down as such. And then you're going to be looking for the imbalance pullback, okay? Very, very simple as your final entry point. So let's imagine once again that this is what actually happens. You get the clearing of the liquidity, the change in market structure. You're going to be looking for any POI above the 50% of this fractal leg here to go short from, okay? And I would suggest, once again, using another naked wick low that you may see over here. You may have a bearish candle wick low that has not been tested yet. Once again, price has not returned back into the wick level. If that is the case, then you're going to be looking to go short here with your target, with your stop loss above the POI mitigation or invalidation point, or POI high over here, mitigation high, sitting in this case over here. And you're going to be looking, once again, to target the fractal leg that came to the POI, which in this case would be this low over here, sell side liquidity being purged. In terms of management, there's a lot of different things you can do. As an example, as price taps you in, you can look to offset and move to break even below the low here, expecting that since price is broken below structure, this becomes your protected high, and we should not have any issues with that. And you're still expecting sell side liquidity to be purged right over here. So that is the entry point that you're going to be looking for. Liquidity sweep, preferably wick low test, change in market structure, pull back above the 50% into a naked level. Simple guidelines to follow, right? You can follow this precisely and you're going to be getting great entries because you're not going to be part here of the manipulation. You're actually going to wait for the manipulation to take place. So step 3, entry, key levels. You're going to be looking once again for a, what did we say? Liquidity engineering, liquidity sweep, naked level refinement tap, change in market structure, pullback 50% plus, naked wick. These are the steps, guys, for the entries. If you do not get this happening, you're not entering the trade. This is going to filter many trades that will end up going wrong. You need these things happening to justify yourself that this can potentially unfold. Okay, if you're going to be the type of trader that's going to say, I don't care, it's at the POI, I'm going short, you're going to lose. Trust me on that. So let's quickly go through it once again. Liquidity engineering, you have that in the form of consolidation. Liquidity sweep, you have that in the form of the clearing of the highs. Naked level refinement, you will get that by zooming into the lower time frame and looking for that wick low over here, sorry for the drawing, that has not been tested. You want to see that tab. Once that happens, you're looking for the change in market structure with big bearish candles that you see unfolding over here. Once that happens, you're then looking for a pullback into the 50% plus of this new leg, and you're executing at a naked wick. Very, very simple entry trigger that will make you a lot of money if used appropriately. And we've covered everything there is to this market. Now it's just up to you to wait for the things to happen and wait to take action. Now, I would denote here that in order to potentially go bullish, if this keeps falling, is you want to be looking for a major swing. Any swing that sticks out. To me, this low over here is a major swing. But considering there's just one below it, I will use this one. And what you would want to do is look for the clearing of any major swing into a POI level that has not been tested, such as this low over here, to go potentially long with the same confirmation, the same key level understanding, and everything basically the same. So this is going to allow you to go long, to go short, and just basically be waiting. You've essentially trapped price. Whether it goes up or down, you have things you're going to be doing. So it's just a matter of the understanding now of the waiting game. So we wait for that. Once again, if price is going to go lower, you're going to wait for the major swing low to be cleared, which in this case is this one. But considering the other one is just below it, you can use that one. And now we have our POI that's just below it. You have a potential key level over here that lines up with a naked wick, which is going to be 50. And if you guys want more videos on naked levels, I can go through them in more depths, by the way. And now you have a potential area to go long. Same applies here. Once that happens, and if it fails, you want to look for your next swing to be captured to potentially go long. Same story applies. Major swing, untested POI over here. Right? So now every time you look at an order block, you have a reason why this one could potentially hold. Right? Because we've cleared a major swing above it. Very important concepts. But once again, your main expectation is to see a pullback into a short. Okay, so with all that being said, I hope that this video made a bit of sense, that it was useful, that it was helpful. Feel free to apply this strategy. Once again, this is mechanical. You can go through any chart and do this exact same thing to prepare, which is what I've exactly done with gold. Right? I've done the very exact same thing. I've denoted my levels. I have my potential buy areas here, and I'm essentially ready to trade it. Right? We've cleared a major swing, which validates these POIs here. I am aware that this is a swing and that it could potentially get taken out. In that case, I would be looking for POIs below, but that's too far out in time. So I'm not really worried about it right now. I update my charts pretty much every day. So this is just my preparation for this week. So once again, I hope you enjoyed the video. Feel free to drop a like and a comment below if you enjoyed the video. I will be uploading more videos more frequently to this channel. And I will see you guys in the next one. Take care, everybody, and I'll talk to you guys very soon.